You're listening to the Scotiabank Market Points podcast. Market Points is part of the Knowledge Capital series designed to provide you with timely insights from Scotiabank Global Banking and Markets leaders and experts.
Welcome to Market Points. I'm Michelle Khalili, Managing Director and Global Head, Equity Capital Markets and Corporate Finance Advisory at Scotiabank. For this episode, I've got my colleague, Pete Gordon, Director, Technology Equity Capital Markets, with me today. Pete, thanks so much for being here.
It's great to be here, Michelle.
Today, we will be covering our updated investor perspectives around the IPO market and the key results from our recent Institutional Investor IPO Survey. Pete, before we get into the survey, could you just talk about the market generally?
First, I'll say we're recording this August 11th. And as of now, we've had 46 IPOs priced for around $22 billion in proceeds. So the market's been influenced by trade tensions, by policy uncertainty, and that's created a good amount of volatility in the market. But what that's led to is issuers really needing to pick their spots. Despite that, we continue to see the indices climb higher, and generally speaking, it's been a good year for IPOs. In the software sector, where I spend most of my time, we've had a handful of solid deals. Earlier in the year, SailPoint kicked things off, and that was followed by CoreWeave, Mountain, and now Figma, all of which have generally been well received by investors and all come from slightly different subsectors. So heading into the fall, we expect to see a new batch of IPOs coming to market from a variety of different sectors.
Our team recently conducted our Institutional Investor IPO Survey to help gauge the market. Can you talk a little bit about the process? Who did you talk to and what are the key focus areas?
So we complete this survey every 6 months. The last time we did it was in January, and we just wrapped this up in early July. We are looking at global investors. The assets under management of those that we surveyed is around $4 trillion. So we have a good sense for investor appetite. General feedback from this survey versus the survey in January is that there continues to be risk on in the markets. And so in January, we saw some medium to low risk from investors in terms of IPO appetite. But this time around, those numbers just ticked higher. So it seems as though investors are continuing to be ready to deploy capital in the IPO asset class.
What's their expectations in terms of the activity levels going into the fall?
Yeah, heading into the fall, I think we'll have our typical lull in the back half of August, which is very seasonal. And then coming out of Labor Day, we expect to see the majority of issuance before American Thanksgiving. I think the rationale for that is, at that point, you have a good sense for your forward guide into 2026, and you can discuss how the revenue numbers are shaping up. And so issuers will definitely be in a good spot to come to market after Labor Day.
So we also came out of a period, call it last year, where there was a focus on profitability over growth. How are investors thinking about those two aspects?
We try to put this debate to bed because in a lot of the conversations we have with corporates, they ask, okay, I can focus on my expenses, my gross margin, or I can focus on growth. And what do investors care about? And in this case, we just straight up asked investors, what do you care more about, growth or profitability? And everyone said growth for the most part, which is a bullish sign for the IPO market. So it's good to see that. But again, you're going to need a lot of context on this. I think it depends on the type of growth and the type of company. But generally speaking, if you're a corporate and you're looking at whether to focus on a percentage point of growth or a percentage point of profitability, survey says growth.
Thank you. What about the sector of interest? What sectors are investors looking at or looking for?
Yeah, I think it's hard to ignore the tech sector right now with everything that's going on in AI. That being said, there's definitely interest across the board for different sectors. But again, just due to all of the growth that's happening in the tech sector, the survey clearly pointed out to growth in technology.
As investors are looking at IPOs and various opportunities, how are they looking at valuations and IPO discounts?
There's been a number of IPOs where the feedback we got from investors is that issuers and sponsors may have been pushing valuations, and the outcome from that is, we just need to see decent at IPO discounts. The question is, what are the comp groups and what is the valuation against which you're asking investors to discount that number to? And so that's where I think issuers and banks and sponsors have to be to be really careful because at the end of the day, what typically matters most is day one trading performance.
How big does a company have to be to think about going public in the US?
I love this question. In the 90s, 2000s, early 2010s, you had much smaller companies going public. And that's something that we'd love to see come back. I think part of the reason why you haven't seen smaller companies go public is just because there's so much private capital out there and there's so many options for companies to stay private longer, which isn't a bad thing. It's actually a good thing. But in terms of what institutional investors are looking for, the good news is the number ticked down from 500 million to 250 million. So keep in mind, if you're coming out at 250 million of revenue at IPO, you probably need to have some pretty strong growth. So if you're a scaled asset, probably don't need as high growth numbers depending on the industry. But if you're a smaller asset, you probably need to pump those growth numbers up.
Let's talk about the IPO process. A lot of discussion in and around cornerstone investors. What did the survey say, and what are your thoughts?
Yeah, the cornerstone investor aspect is something that continues to evolve as the market was reopening, let's call it in 2022 and 2023. Cornerstones were on the cover of a lot of key transactions. You had clients of the firms going public, and then you had fundamental investors on the cover. And what they were really doing is just validating the business model or validating the valuation, which is great. But the downside is that they eat up a lot of the stock that's available for people to trade. So what investors continue to want now is less cornerstone, more float. It's fine if a cornerstone investor is on the cover, but we want to keep that number well below 20%, maybe just 10% or less. But that's a good sign. That's a good sign. It means that the IPO market is healing and things are getting back to normal.
You mentioned float, obviously an important factor and consideration for investors looking for liquidity.
Yeah, float is something that really helps dictate the health of the company's liquidity over time. And so oftentimes you'll see corporates or sponsors try to initially dribble out a small percentage of float at IPO. And the reason for that is they're trying to balance, pricing tension, i.e. valuation multiple against the amount of shares that are outstanding. And so I think at the right multiple, there's no reason why you shouldn't have a healthy amount of float. And so we're looking at like 10 to 20% of float. Certain funds would like north of that, but I don't know how realistic that is. I think keeping in that sweet spot is definitely the right advice for corporate issuers and sponsor-backed companies.
We were just talking to an investor today about non-deal roadshows and connectivity. What do investors want to see, and how often do they want to meet companies before an IPO actually happens?
It's really something we can't emphasize enough is you have to be able to meet with investors well ahead of your IPO. The survey says institutional investors want at least 2 meetings before they take a meeting with you on the roadshow itself or a testing the water meeting. The reason this is important is a little bit nuanced, but even for companies that are well known to the public, that would sort of be known by what we would call retail, still need to go out and talk to institutional investors. And the reason is you need to get them comfortable with how you're looking at the financial model. Because at IPO, when they go to build out their own model, it doesn't matter how well known you are as a product, it's the model that really matters. And so getting people comfortable modeling out the cash flows, modeling out the valuation, it's just going to create a lot more certainty for the valuation at IPO and ultimately help you and your sponsors and everybody else involved in the transaction.
Investor connectivity is so important to lead up of the public launch of an IPO. That's a really important takeaway. Pete, we've heard how constructive the IPO market is, how constructive the market is generally, but there are some risks out there. Can you talk about what investors are concerned about? What keeps them up at night?
Where we are at from a interest rate perspective, perhaps doesn't move the needle as much as say it did when we were moving from the zero interest rate policy era of the post-pandemic period of time into the high interest rate policy that we're in today. Now we sort of have, let's call it, more normalized elevated levels of rates. So an incremental cut here or there doesn't necessarily move the needle on valuations within investors' models as much as it did from the zero interest rate policy to the higher rate policy that we're in right now. So folks are less concerned, generally speaking, with like simple moves. I think what they are most concerned with is, macro uncertainty, volatility, things of that nature, and just the overall level of growth of the economy. And so if inflation continues to be an issue, that's definitely a concern. A situation where we have high inflation and low growth is definitely not ideal for the overall economy, never mind, just IPOs. So that's a sort of summary of what we're hearing from folks on the street.
When I look forward, we've got a couple IPOs that are on the road right now and expected to price. The pipeline is building. What are your thoughts on the forward look?
Well, I'm a technology equity capital markets banker, and so I could not be more bullish on AI. Right? So I realize that's a pretty easy thing to say, but the developments that we're seeing almost daily or weekly are just incredible. There's so many different businesses being created, so much revenue to be had. Moats from incumbents are being taken down, and from a technology perspective, I just can't wait to see what the future has ahead for the tech market.
Pete, thank you for the IPO insights, and we are looking forward to a busy back half of the year.
Thanks, Michelle. It's great to be here.
And thank you to our listeners for tuning in, and be sure to join us for the next Market Points episode.
Thanks for listening to Scotiabank Market Points. Be sure to follow the show on your favorite podcast platform. And you can find more thought-leading content on our website at gbm.scotiabank.com. This communication does not constitute investment advice or any personal recommendation to invest in a financial instrument or investment research. This communication is provided for information and discussion purposes only. An investment decision should not be made solely on the basis of the contents of this communication. It is not to be construed as a solicitation or an offer to buy or sell any financial instruments and has no regard to the specific investment objectives, financial situation, or particular needs of any recipient. The information in this communication is based on publicly available information, and although it has been compiled or obtained from sources believed to be reliable, such information has not been independently verified, and no guarantee, representation, or warranty, express or implied, is made as to its accuracy, completeness, or correctness. Past performance or simulated past performance is not a reliable indicator of future results. Forecasts are not a reliable indicator of future performance. Please refer to our legal disclosures on our website.